Okay, hi guys, Richard Jackson here from Lepus, Jackson Capital. Let's go over ES and have an analysis of what has been going on. Let's have a look at the calendar first. I mean, last week we had the CPI come up. So that was, this move in here. Okay, and we all know about that. This move to the downside didn't even come back to that 236 of the whole move. Did come to the 50% of that last little move in there. This is a 1 hour chart, remember? Let me take, whoopsie daisy. There we go, let's do that. Okay. And, based on that, there was so much resistance in there. Of course, it was just going to fall away. Okay, so, after a momentum like this, thinking long is pretty horrendous. Did come back and meet that 100 period moving average and then took off back to the downside. On Friday, we did see this double bottom in here. Let's go over to it in here. That was Friday. Yep. And that was fairly reasonable to think that would have a little bit of a bounce in there at that 83.50 mark. Okay, so I didn't quite get to 83.50. It did have a move up, but it didn't get to any of the targets. Okay, so come Monday, which just started moving to the downside, I did think, this should be a long play in here because that's the 50% 618, but it really struggled. Okay, and it also came back to that 200 and then fell away again. But anyway, let's go into some of the trades on Monday. Now, there was a holiday over in the UK, so I wasn't expecting too much volatility. I mean, you can see here, based on this, there are only 2 point increments on the y-axis there. So these were my trades. We had, the lows in here. I did think that, because of this push to the upside, that we might have some sort of bounce at the 618. Didn't happen, okay? I was wrong there, got a 2 point stop. Then at the lows, thought it did bounce up, but I was looking for more out of it than the 4.25 point. I was looking for 4.25 points. If I did stick to my 3 points, I would have still missed it. Okay, so it's not a biggie. I got a 2 point stop on that. If I was a little bit more aware, or more on the ball, I could have brought that into a 1 point stop or 1.25 stop just under that last little fractal in there. Let me just zoom in a little bit so you can see a bit clearer. So there's the last little fractal in there, and just bring your stop a tick underneath the last fractal. So I would have got maybe a 1.25, but I took the whole 2 point stop on that one. So that's -4 to start the day. Then we had this trend line in here. Okay, so I took a trade right on that trend line. There was not too much else going on, so I kind of hadn't found the confluence yet. So slap on the wrist for me a little bit. I know that I harp to everybody that we should find confluence areas. But we were coming down into this SR level in here. So let me just show you what this SR level. This SR level is this one. So that's the double bottom from Friday. SR level across here at this 38.53, 38.54 mark. So I thought, I might just jump in a bit earlier based on this trend line. It did come up and give me a 4.25 on it. I'm just counting it as 4 anyway. And if I go back here and take that leg to the downside, we had broken these lows in here. So it's support, turns resistance. Same, and the confluence of that is 38.60. You could call it 38.60, but really the downside, the 302 fib level. Okay, so SR plus the fib level, plus that momentum to the downside, we're breaking the new lows in there. That was a good opportunity to go short in there as well, so took that short. for another 4 points, and then right on the SR level I went long just to collect another 2 points in there. So all up now. Okay, let me just explain what this means. One ES contract stopped, I placed 2 ES contracts on this, right? So that gave me, instead of 4 points, we could call it 8 points. Then a 4-pointer on the downside, so that's 8, 12, and then 2, which is 14. 14 minus 4 equals 10-point day. This did start to roll in here. You can see that there was, we did have divergence. Also in here is that there's a lot of divergence as well. Okay, so this is really showing us that, it's slowing down because we've got divergence here, or larger divergence, and then smaller divergence as we come a little bit deeper. So this is coming into the last hurrah. It didn't quite come and meet this trend line, and then before it took off again. What was really good, this was what's really good, okay, is that on the half-hour chart, we could call it the half-hour chart, but I reckon it looks better on the 1 hour chart. Let's go to the 1 hour chart. We've got divergence in there, okay, really nice divergence in there. Whoops. And divergence across here. Okay, so when we saw, this kind of come around, okay, so let me just get rid of this one. Okay, so this is more of a V shape in here, isn't it? Okay, let's go have a look. Let's have a look at it on the 5-minute chart. So what does it look like? Let me just get rid of all of these markings so that we can see it properly. Bear with me, guys. Okay, so that really, we could call it V-shape in there, okay, because remember when we do a V-shape, here's the last leg. There's the last fractal high to the last fractal low, okay. This Fibonacci to the downside, also this SR in here was completely ignored, okay. We bounced straight back up, slammed straight through the 50, the 302.50, 618. It kind of stopped a little bit in there, but then it slammed straight up into the 786 and then just kept going. And we broke this last high in here. Okay, this is the last high that it broke. Okay, so you could be saying that. Well, I would say that that's a V-shaped reversal. Let's go down to the 1 minute. Yeah, there we go. Same idea. It did come back a little bit right at this top, and then it just went through it. Okay, so that's being a V-shaped reversal. So that would indicate that we're at the end there. We've also got an accompanying wick over here. Okay, so that's a reasonably sized wick. Nice candlestick formation, because that's a hammer in there. So, and then we've got a bullish engulfing on this next one up in here. This is the open of this is into the 10:30 news, okay, and the open of the US session, okay. So that's when our volatility increases. All right, so that was the reversal point. I was looking at this here as being a reversal point, okay, with this rounding bottom. But it really wanted to wait a little bit longer, and that would be, looking into the 8:30 news, which there wasn't really any, but this was coming back after lunch in the UK. Okay. Anyway, you could have taken that, no problem. There was a really nice rejection in here. This is a beautiful wick rejection. So taking a short on that, I was done for the day. So taking a wick rejection right in there would have been a great trade if anybody had taken it. Even if we still had our 3-point stop in there, let's do 3 points, and then you could have taken 5 points to the downside easily. Okay, so that's a nice rejection. You would have got a little bit of heat in there, but stick with it. I guess we're still going with momentum to the downside. It hasn't rolled yet, okay, but now we have rolled over this side, okay, on the 1 hour chart. Areas that we want to take into consideration is this one. This one got broken. in here. Okay, so that was a very significant break in there. So this will probably come up into here. This is not a double bottom, but you don't know. You really don't know what other traders are thinking. So what I'm going to do is I'm just going to put in my double bottom rule just in case with kind of average prices. Okay, just to see where this is, just in case the market is thinking it is a double bottom, but I do not call that a double bottom. That is divergence. Okay. All right. Hopefully you've just learnt something out of that. Let me just keep having a look here. Okay. So as soon as this open of the US session opened up, this was a great trade. We broke through that 1,000 period moving average. And we came back to 382 for, you could be popping that all, at least a couple of times. That's nice. There's a nice double top in there. Here we go. So here's our double top rule right to the 618 to the tick. Okay. So there's a nice double top in there. The idea with this double top is this wick rejection in here. That's a huge sign that that's going to fall away. Okay, so this is a resistance. Try to resistance again. Resistance for the third time. Triple top, basically. Wick rejection, mate. Sell that every day of the week. Okay. Also in here, let me just exit. Get rid of that. Okay. Let's take a Fibonacci of this whole move to the upside. We've got the 618 and back onto the 1,000, right? And here is our trusty head and shoulders wick rejection. Off we go. Didn't quite get to the number one level, got to the 618. Okay, but have a look at the candlestick formation in here. Okay, push to the downside, ate it straight away. Okay, so with this bullish engulfing. So you could have either done one of two things on this position. Obviously this is 2 o'clock in the morning, so most of us are not up by then. You go and enter in long there with your stop down here and you target up here, at least 2 to 1, right? Okay, that's your first opportunity. Okay, let me clear this. The second opportunity is to take a 50 rule on it. Okay, because of this, I'm talking about this candlestick formation, not the head and shoulders. Okay, there's your 618 level, confluence with the 1,000 period moving average. So you take that long. No, long position. Take this long in here. You kind of find it, halfway through. Put in, you could take 20 points out of that pretty easily, but I would do 2 to 1, so that's a 5 points. Then I'll probably take 10 points. What we should be doing is if we are going to trade that as a 50 rule, let's put on our AB equals CD. That comes up to the 618 pretty much. Okay, but there's the number one. Okay, so round about that 10-point mark is the number one level. All right, guys, I'll leave it there. If you've got any questions, let me know.